China's economy didn't crash. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because I want to talk about the latest GDP figures that have come out from China. Now, the economy in China over the whole year has grown 8.1%. It's done quite well. It hasn't crashed. Sure, it's been slowing down a little bit, and it's not going as gangbusters at the end of the year as it was earlier in the year, but it still hasn't collapsed. The economy isn't crumbling, and the doomsayers that are predicting the fallover of China kind of disappeared. Now, this is very important for us here in Australia because our economy is pretty closely linked to China. And here's one of my favorite websites, the Observatory of Economic Complexity, and it shows the relationship between China and Australia. So China, we are their 12th export destination. And their number one export to Australia is broadcasting equipment. So I'm using my microphone here, which is made in China. The camera is made in China. All my screens are made in China, pretty much, everything. Now, China is for Australia, they're our number one export. And our main export to China is iron ore. Okay, we send them iron ore, we get back broadcasting equipment. There you go. So there are a few steps in value adding there. Now, the economic complexity of China is 1.01. They're 29th in the world. We are 79th in the world. When you have all these people arrogantly saying, people from third world are coming to Australia, this, that, or the other, they don't really realize how primitive our economy is, everyone. People who are suggesting that we can become the manufacturing or solar capital of the world because we have a lot of desert in the middle of nowhere and sunlight, they don't appreciate our low economic complexity. We don't really value add to anything we export. Their GDP is second in the world at $14.3 trillion. Look at their GDP growth, 181%. Ours is 13th in the world at $1.4 trillion. We're literally a tenth of them. Per capita, we're doing better, but in total size, we're about 10%, guys. If we have a look here, GDP per capita is 10,000. We're 55,000. If we can have a look here, we can see. Oh, they're not giving me these things. Why not? Oh, wait a minute. I have to go down here. Historic data. That's it. I can't get the new data, guys. So we can see here, iron ore is the biggest export. Natural resources, where here it's broadcasting equipment, computers, semiconductor devices. So the state of the Chinese economy has a significant impact on us here in Australia. Don't kid yourself. It is really important to Australia. It's a decent export destination. The 55 billion is probably equivalent to, these are just product, it's equivalent to all of our tourism. So if you add that to it, including the Chinese tourism, that's a big chunk. And a lot of that's kind of disappeared in recent days. So let's have a look at this from Trading Economics. So the Chinese economy expanded 4% year on year in the fourth quarter of 2021. Easing from 4.9% in the previous period, but exceeding market consensus of 3.6%. So it's doing better than the market consensus. It was the slowest pace of expansion since the second quarter last year, amid multiple headwinds, including a property downturn, supply chain issues, and COVID-19 outbreaks. Considering full year of 2021, the economy grew 8.1% from a year earlier, the fastest expansion in nearly a decade, exceeding the government's target of about 6% and following a revised 2.2% growth in 2020. Consumption expenditure contributed 65.4% to the 2021 GDP growth, compared with 54.3% in 2021, surpassing the average level of 60% from 2013 to 2019, but was still lower than in developed economies. So we can see down here, there you go, we can see these are the growth, and there's the crash that everyone had all over the world. They didn't go down as bad as some of the other economies around the world, and we can see here how they beat the consensus, guys. So Trading Economics was 3.7, the consensus was 3.6, and they were 4%. And before that, it was the TE forecast was 5.1, the consensus was 5.2, and they were 4.9. So they were below, doing worse, but in quarter three than both the consensus and TE, they were doing better now this time. So we'll have to see. And here's some of the other figures, guys. We'll have to see how they go. Let's have a bit of a talk about this one. Now, this is important to keep an eye on. You'll see a lot of fear and concern about the Chinese economy. We're so closely tied to China. Investors will trade the Australian dollar as a proxy for the Chinese economy. We can see iron ore, the iron ore exports and companies that we have here in Australia, they're dependent on the Chinese economy to a significant extent. There's been a lot of animosity between China and Australia in the news. We see that repeated again and again. A lot of posturing, shall we say, from our news and from our politicians, and the same thing happening from China. But we have to look at the reality of, how much of it is that actually going to impact exports and tourism. The next big thing to watch will be international students, to see if they return, or if the rhetoric that they're not coming back will become something, or will be real or just a fantasy. Another thing to watch is their response to Omicron. If China has significant lockdowns, or if they do another strategy to deal with it. We'll have to see, guys. Anyway, thanks for watching. Let me know your thoughts and opinions on this. Are you worried about China? Do you think their whole economy is going to crash, or do you think it's going to boom, or do you think they'll just stimulate it to keep it chugging along? And then, well, they can save Australia from a second recession, just like they did at that GFC. Let me know your thoughts on that one in the comments below, guys. Thank you all for watching. Check out this video about iron ore bouncing back because of China restocking and their economy going good. Take care, guys. Have a great day. And I'll see you in the next episode of Heise Says. Bye for now. Good coffee, guys.